Hey everyone! In this video, we're going to talk about investing for beginners. This video is for you if you're just starting out, you want to invest, but you just don't know where to begin. There's so much information out there, it's overwhelming. In this video, I want to give you a step-by-step overview of exactly what to do, how to start, and most importantly, how not to lose your money. Now I want to say right off the bat, I'm not claiming to be some super investor or guru. I'm simply sharing my journey, what I do, what I've been through, the mistakes I've made, and what has helped me succeed. My story and all my failures, I trace them all back to my own financial illiteracy. Nobody ever taught me this stuff. By the time I was 24, I was financially bankrupt. My total debt was over $200,000 after failing at 13 different businesses. And honestly, it all happened because of my bad financial decisions. When I started to climb out of that hole, I started reading books, attending courses, and watching videos just like this one. And slowly but surely, I started to understand how the world of finance actually works. I consider one of my greatest teachers to be, of course, Warren Buffett. I read all his annual reports. I study his investments, his deals, where he lost money, where he made money. I study him, and I follow a strategy of long-term investing. On my channel, I only talk about long-term investing. This is where you put money in, you hold those assets, and they grow over time. I am against day trading. I'm against Forex. I'm against, chasing crypto pumps. If you're looking for that, this isn't the place. I'm talking about long-term, practical, fundamental investing. Step 1. Invest in yourself. Okay, so before we dive into any details or look at any tools, let's first define, what is investing? The word itself implies that we invest some resource because we want to get more back. It's like farming. You plant one seed and you expect to get a whole plant back. That's normal, right? The same thing happens in finance. So, as a beginner investor, what is the most important resource you have right now? It's time. You have to learn to invest your time correctly. This is the first step. To become a successful investor and not lose your money, you must first invest in yourself. It's great that you're watching this video and that you're interested in this topic, because by investing time in your education, you acquire another resource, money. People ask me, how do I make more money? I always answer, first, learn to invest your time correctly, so you get the money. Then, you take that money, you add your time, you invest it again, and you get even more money. That's how it works. So I'm encouraging you to start by investing in yourself. I've prepared a small selection. I don't want to overload you, but the first book I recommend you read is Buffett-style by Mary Buffett. It's written in very simple, accessible language. The second book I recommend is The Intelligent Investor by Benjamin Graham. This was Warren Buffett's teacher. So step 1, start investing your time in your education as an investor. You have to read these books before you put your first dollar into the market. Step 2, create a personal financial plan. After you've started leveling up your skills, step 2 is to create a personal financial plan. This plan is made of a few key parts. Your goals. What do you want to achieve? Buy a house, travel, pay for your kids' college, build a nest egg, live on passive income. How much? How much money do you actually need to hit those goals? You have to calculate it. How? Now that you know the goal and the amount, how will you get there? This is your strategy. Security. How will you protect your investments and your assets? Right now, I'm just giving you the 30,000-foot view. The goal of this video is to show beginners where to start. In future videos, we will dive deeper into each of these elements. Step 3. Understand the financial instruments. Step 3 is to understand the actual financial instruments. You need to know what tools are in the toolbox. Let's just walk through the main ones. Bank deposits, savings accounts. A lot of people confuse this with investing. Putting money in a savings account is not investing. Even if you get a tiny bit of interest, your money is almost certainly not beating inflation. You are actually losing purchasing power every year. Foreign currency. This is a more advanced tool, but some people buy other currencies, like the euro, yen, or Swiss franc, to diversify their cash holdings away from just the dollar. Real estate. This is property you buy to rent out. The downside here is the very high barrier to entry. You need a lot of capital or you have to take on debt, which isn't always profitable. Precious metals. Gold, silver, platinum. You can buy physical coins or bars, or you can invest in them virtually on the stock market through funds. Bonds. A bond is basically an IOU. A government, like U.S. Treasuries, or a corporation needs money. They borrow it from you and promise to pay you back with interest. It's generally a safer, low-risk instrument. Stocks, shares. A stock is a small piece of a company. You can become a part owner of Apple or Google or Coca-Cola. This is a riskier instrument, and many people try to trade stocks, buy low, sell high. That's not what we're doing. I'll put a chart on the screen right now. If you look at the market, say, from 1929 until today, you'll see that after every crisis, the market always recovers and goes higher. It's always growing long-term. This is why I'm for long-term investing. ETFs, exchange-traded funds. This is the last main tool, and it's a great one for beginners. Think of it as collective investing. Instead of buying just one stock, you can buy a fund that holds hundreds of stocks. A famous one is the S&P 500. This is a basket of the 500 largest U.S. companies. When you buy one share of an S&P 500 ETF, you are instantly invested in all 500 of them. This gives you amazing diversification and lowers your risk. Step 4. Understand how the system works. Step 4 is to understand how this all fits together. Over here is you, the investor. You have the money. Over here is the company, the issuer. They create the stock. The company puts its shares on the stock exchange, like the New York Stock Exchange or NASDAQ. But you, as a private investor, can't just walk onto the stock exchange. You need a middleman. That middleman is the broker, like Fidelity, Charles Schwab, or any modern investing app. The broker gives you the app, you say, "I want to buy this stock." The broker sends your order to the exchange. The exchange confirms it, and boom, you own the stock. That's the basic setup. Step 5. Choose your investment strategy. Step 5 is to choose your strategy, which really comes down to risk. There are generally 3 strategies. Conservative, low risk, low return. Moderate, medium risk, medium return. Aggressive, high risk, high potential return. This is all about what you are personally willing to take. The more risk you take, the higher your potential return, but also the higher your risk of losing money. A quick rule of thumb. The older you are, the more conservative you should be. Why? Because if you're 60 and you go aggressive and lose everything, you don't have time to make it back. If you're 20, well, it sucks to lose it all, but you still have time to rebuild. Step 6. A warning about scams. Step 6 is a warning. As a beginner, your main job is not to lose money. So how do you spot a scam? If anyone promises you guaranteed returns of 100% or 300%, it's a scam. Run away. There is no magic money button. If they say, "We have a guaranteed proven strategy," there's no such thing. That's a huge red flag. This isn't a scam, but be wary of the brokers themselves. Remember, they make money from commissions or fees. They will always try to sell you extra features, subscriptions, or advice you probably don't need. As a beginner, what you need is to read the books, watch free videos like this, and test small amounts of your own money. Step 7. Principles of a successful investor. And the final step, Step 7, the principles of a successful investor. By the way, there's a great book called Principles by Ray Dalio. I recommend you read that too. Consistency. You have to be regular. Every month or every payday, agree with yourself that you will invest 10% or whatever you can of your income. Don't invest in what you don't understand. If you can't explain it simply, don't put your money in it. Diversification. This is the smart word for don't put all your eggs in one basket. This is why we study all the different instruments. Reinvest. You want compound interest to work for you. You've heard that the rich live off interest. Well, the super rich live off the interest on their interest. You must reinvest your dividends and gains. Don't panic. When the markets are down, when there's a crisis, do not panic sell. Most people lose money by selling at the bottom out of emotion. Your main task is not to lose. So remember, it all depends on you. Invest in yourself. And right now, please subscribe to the channel if you're watching on YouTube. Hit the like button and the notification bell. If you're on Instagram, follow me there. And please share this video with your friends, anyone who wants to get started with investing. I hope this was helpful. Thanks for watching, good luck, and I'll see you in the next one. Thanks for watching. Please like if you found this helpful, leave a comment, be sure to subscribe, and share this video. You can find useful links in the video or channel description. See you soon.